All right, good afternoon. This is the weekly market surge by Investors Business Daily take on the market. I will be your host. My name is Scott St. Clair. I am the manager of the premium product group here at Investors Business Daily. Here is the disclaimer. I'm not licensed. Nobody at IBD that I'm aware of is licensed. Don't make buy, sell, hold recommendations. Try to stay in our circle of competence, research, education. Please take a moment to read this. All right. So overall market thoughts, a lot to discuss there. It's quite a week. It's amazing how quickly things can change. Industry groups, stocks to watch, few of those too. So this might be a long video. Let's see. Um, and then the quote of the week. So overall market thoughts. Here's the election year seasonal pattern since 1952. I feel like I've used this screenshot before earlier in the year. The interesting thing is, are we in the sitting president, the open field? I guess there's a lot of confusion. Anything can happen there. I don't have a clue how that's going to change. But if it's an open field, you can see how the market seasonally will top in June and kind of run into a bit of weakness into the election. And so far, that's kind of been how it's played out. I mean, now it's only July 19th, but I find that a little bit interesting, which is why I used this screenshot. Because if that's the case, then maybe we get into some seasonal weakness with the market bottoming in, the fourth quarter, sometime in the fourth quarter. I read this in the Financial Times. I apologize to the Financial Times that I don't have their tag at the bottom. It was so large, but I found this very, very interesting from a sentiment point of view about AI. Assuming a 5% cash flow yield, NVIDIA share might be worth 20,000 in 10 years. Translates to a market capitalization of 49 trillion. He put the probability of this type of outcome at 10 to 15%. At least he was somewhat low. But this is what struck me. The current combined market capitalization of all the companies S&P currently is 47 trillion. So NVIDIA would be, now fast forward 10 years, what would the S&P be? But this type of sentiment usually doesn't come at the lows. I don't know that this is the high for NVIDIA, but you've just seen a lot of kind of overly optimistic sentiment on AI, and the stocks have kind of run into the tiniest bit of bother. We'll have to see. But if NVIDIA were to be worth more than the S&P 500 is currently, I don't know what that would translate to what the whole market would look like. We for that to happen, and I think that it'd have to be like a hyperinflationary environment. My 2 cents, and the S&P would be 470 trillion, and a taco would cost $482. I don't know. It's just I found this type of sentiment, and I'm a student in history. I love this type of stuff. And someday, let's fast forward 10 years from now and see how this were to play out. The Nasdaq and the Russell. A lot of talk this week on the Nasdaq and Russell. I think it was the largest performance. Oh yeah, here you can see since 2000, a 5-day performance spread between the Nasdaq 100 and the Russell 2000. I'll pull up the Russell, but the Russell just skyrocketed out of that base, which is hilarious to me because right when I, have zero interest in it, and I have had zero interest in fairness to me, it really worked big time. I wasn't, I'd never even considered buying that breakout. So it's a very unusual market time in the way I view it. Like, are we at kind of a tipping point, a turning point in the market where the money will rotate out of big cap Nasdaq, big cap tech, et cetera, and into other things? it's possible. The problem with that is if those stocks throughout history, when the leaders waver, it's very, very rare for like all of a sudden there's the market is fine and there's new leadership in a different area. And in this case, it almost has to, the indexes, the big indexes would have to go down because of the weighting of all those big leaders, the Nvidias, the Apples of the world. So it's a very historic week as far as Russell was concerned. Um, all right, so tech stocks, no surprise, they haven't accounted for much of the S&P 500 since the early 2000s. So a lot of comparisons to the bubble of 2000, which is probably good if you're bullish because it won't probably play out exactly that same way if there's too many people that think it will play out that way. So like you saw a lot of charts, the overlay of Cisco and Nvidia, and you have to be careful with those overlays because you can fit them how exactly by choosing the correct starting point in your mind so that they look exactly how you want. But there are some similarities for sure, and this is one of them, that there's just a huge concentration in this market in technology, and especially big cap technologies. Look at that peak right there. I think this is the last one. Last but not least, kind of same things associated with the concentration of the market, but you can see other peaks of concentration. The market has run into trouble. Is it exactly have to be at this very moment? No, but if the market is showing you kind of weakness and you're stretched on all these other metrics, then you have to kind of build into your mindset like a scenario that maybe this is possible. So like that scenario of the Nvidia, that guy had a 10 to 15% probability of it. I think that's a good way of thinking. I think that probability is ridiculously high, but that's just how my 2 cents. But like, all right, so what's the probability of this chart being correct and the market getting into trouble and us going into a recession, a bear market or something like that? I would say it's probably 15, 20%, how I would put it. So I think there's like a 1 in 5 chance that the market is topped and we go into a bear market. So what does that mean? It means there's a 4 out of 5 chance that I'm wrong. So I want to be able to think about it both ways. And in fair, I want to preface this, I should say, is a better word. And a lot of you have probably heard this from me. I tend to get bearish, cautious much quicker than the most people in the market. So keep that in mind. I tend to shoot first, ask questions later, both ways. I think this week was a weird week for me in the market. The stuff I was in was acting really well. The day that the market got hit really hard, was that Monday? I was on IBD Live and I was on twice this week. So I cannot remember which day it was. It was Monday or Wednesday, but my account was fine. And then all of a sudden I saw my account go from green to red, like a lot. And it just, the speed of it was troubling to me. And it raised alarm bells for me to get lighter quickly. Something's not right. And when I don't feel that way, that something's not right, I quickly just start reducing exposure. And sometimes it saves me, sometimes it hurts me, for sure. It is what it is. So let's get into the indexes. And here is the NASDAQ. Now, apologies, I don't know if I said what time it is. It's about 2:00 Pacific time. So the market's definitely been closed for a while. And you've had 1, 2, 3 bad days. Well, 1 really bad day and 2 just kind of normal bad days. And your first kind of bad break there, NASDAQ was down almost 2%. And the volatility has really been contracted from these indexes. Like 2% used to be like not that big a deal in the stock markets for years and years. But it feels like the volatility of the indexes has really been contracted out. So that was like a bad day, 2%. And then the next day, or this day right here, 717. So yeah, that must have been Wednesday, that day I was talking about earlier, almost 3% of the NASDAQ. And the market had gone like a number of months to years without any type of bad break like that. And so here's the S&P. I think this was the first 2%. What day did it go down? Or maybe we were talking about the NASDAQ. There was like the first 2% down day in a long, long time. So it's first bad break. Anything could happen. There is unusual weakness I feel in like individual stocks. And I noticed the commentary in IBD Live. A lot of people on this day were commenting on how bad they were getting hit that day. And they're getting really hit hard that day. And one person in particular had a question like, how do I avoid these types of down days? And I actually responded, the way you avoid them is you have to sell on the way up. So right from Bill's book, I think it was, I can't remember the page number, 2 something, because I remember highlighting for this person the page number. Now that I need it, I can't remember exactly. But he said, new knowledge in mind, I made a rule, buy it disciplined, buy it the pivot, pyramid, etc. Then I'd sell each stock when I was up 20% while it was still advancing. And that is the key. You have to take some profits on the way up, knowing that they're going to keep going up until they're not. And it's frustrating to sell something at 50 or 60 and see it at 70 a month later. But a lot of times I'll come back to that same name, 3 months later and it's 40. And so 50 turned out to be a pretty good sell. So the only way to do this, to avoid these types of days, is you have to sell some stocks while they're advancing. Now, this is the hardest part of investing, I think, and I struggle with it myself because we all want to be, like Kathy Donnelly. I assume everybody heard or listened to the IBD podcast, saw her story. She's up tenfold on NVIDIA, and we all want to do that. But she's been in the game a long, long time, and she would probably be the first to tell you how many chances, numerous attempts she's made to do that. And then when we pull up the NVIDIA chart, the downdraft that she had to endure to get to that, I would not have been able to endure. Not a chance, no chance. So that's why I like to sell them, most of them, on the way up while they're advancing. Mark Minervini is almost, I don't know, he maybe once in a while he holds one for a longer term, but as a general rule, I feel like his process is he's just taking profits a lot of the time, 15%, 8%, 20%, 12%, and they add up. And I've seen a friend of mine in the 90s, he would do that constantly. He was just always taking profits, and they would go up without him. He'd be on to the next name, and he did tremendously well. So there's more than one way to do well in the markets, and you have to kind of know yourself from a personality standpoint. Do you prefer like the Mark Minervini style or the Kathy Donnelly style, or somewhere in between? Like ideally, you would do a little bit of both. It's hard. I'll tell you, that's kind of what I do, but it's very difficult because it's frustrating when you pick the name to keep and it goes down. You don't have that big home run, or if you get out of the one that turns out to be the big home run, that's frustrating, of course, too. But I would say probably 80 to 75, 80, 85%. I don't know. Maybe one day I'll go in there and dig in deep. But if I have a profit in the stock, almost always I'm taking that profit or maybe taking some of it because of of this. It doesn't, it looks like nothing on the chart, but yet so many stocks have really, really come down. I was on the indexes and got off on a tangent, but anyways. So here's IWM, explosive move, got really stretched from the moving average, like a bunch of standard deviations away from the moving average. And no surprise, it's come in. I don't know. I don't know what to make of this. I don't know if it's real or not. I wish I had an answer. I flip a coin. From a bullish standpoint, I like the fact that it's a very powerful thrust. I know that Stanley Druckenmiller, Duquesne Capital, had his largest position is IWM calls. So maybe it can continue. We'll see though. My experience is it does this a lot. Like this is a powerful move, and then it gave back, 85% of it. And then it breaks out and fails and tries again and fails. Here, this is a really nice pattern. Looks great. Just crumbles. So it's really difficult to trade the Russell. Let's look at the Dow. Here's the diamond. Comes out of this flat base all the way back. So we'll have to see. And then I guess this would be a good place to talk about like the FANG stocks, and then I'll go more into detail on the other ones. But here is, and let me turn off my camera in case I'm covering the chart, but this is the triple leveraged up FANG, and it's probably down 20% off the high. Yeah, 23% in 2 weeks. And it's made a massive, massive move. It's 10-folded off the bottom. It is levered. If I go to the FNGS, which is not levered, it's up 2.5-fold off the bottom. And I don't. And I should definitely mention that for FANG-U, I am short FANG-U. I'm short the up one. Why not be long the down one? Well, this is why. This is the monthly chart of the down one. It's just a natural bleed from buying options. And I think one day, if this is the end of the market, I don't know. Like I said, I felt like there's like a 20% chance, which means there's an 80% chance I'm wrong. But if it is, that type of bleed will work the other way. You can see what happened here in this bear market. It went from 400 to 40 because it's constantly rolling over the leverage. All right, so let's go into, let me go back to my slides, make sure that, I think that was the last slide I had. Yeah, so I want to jump to the industry groups. Open stock ideas, weekly industry groups. Let's go ahead and sort this. Oil and gas royalty trust, number 1. Steel specialty alloys is 2. Medical long-term care, interesting, number 3. Gold, silver is number 4. And the makeup of the industry groups has lost its luster a little bit in the last handful of days to weeks. Long-term care went from 7 to 3. Steel went from 9 to 2. Oil, gas went from 4 to 1. Retail, consumer electronics, food, meat, 23 to 12. So all the computer ones and all of those are slowly kind of moving down the list. So electronic fabless is currently 10. It was 1. You can see that kind of weakness coming in. So yeah, the market or the indexes are, the industry groups are sort of reflecting the rotation that the market encountered. All right, let's jump to stocks. So let's start with NVIDIA. Okay, so long-term, well, I reset the trend line, but it triggered this kind of upper channel line. And so far that's been a pretty good offensive sell signal. I mean, look, is stock in trouble? It's down 16%. It's not done that much wrong, but it feels a little tired to me. You've got a bad break, you got a rally, and then you had a bad break again, and it actually went down. It's right on the 50 days. So next few days should be interesting. If it can't hold the 50-day, then this spot down here at 100-ish will be key. See if it can hold that. And this is the leader in the market. So all eyes are on this one, and it's going to definitely make a difference to what's going on in the market. I don't know if I mentioned last week, I feel like it's tired, and I am short in video by being short NVDL, which is I think it's only the 1.25 long. Oh no, it is 2 times. So it's 2 times long NVIDIA. Again, if I'm right on NVIDIA, this will go down. If I'm wrong on NVIDIA and it just goes sideways, this will go down as well. Maybe not that much, but at least I won't get hurt. And if I'm wrong on NVIDIA and NVIDIA goes up, I will get hurt. I will lose in this for sure. But that's partly why I like shorting the up leverage ETFs versus buying the down one. NVDS, that's the down one, no surprise, in the doldrums. Now in IRAs and cash accounts, I can't short, so I have to buy NVDS if I'm interested in that. And once in a while I will, but you can see like you have to be pretty proactive with it. 35 to 42, back to 38, back to 42, back to 35, back to 42. And so you have to kind of pick and choose your spots when you're buying the levered ETFs, I think. So that's NVIDIA. Meta. So breaks out of the space. Very good base. Barring this little action here. I guess that's kind of weird, but I do like that base. Breaks out, has this really strong bar. I mean, look at that bar, and then done nothing but go down since. Not good action. Apple holding up fairly well. I'm actually better than fairly well, holding up pretty well. So it's hanging in there for sure. Amazon, a little bit like Meta, breaks out of the base, rolls over. And then what about Tesla? So you have all these ants, that power off the bottom, which is what it grabs. And my experience with the ants is they come down into here. So that would be how I would handle Tesla. I think I might even do that. If it comes down to the 50-day at say 220-ish or something, I might take a stab on the long side at it, as hard as it is to believe. But it's based on what I've observed. When you get those ants, and then that first test of the 50-day is usually a great spot, a nice risk reward spot. SMCI, it's really choppy. The bars are so big in SMCI, I find it hard to trade. So I have not traded this one in a while. What else is out there that's tech wise? Qualcomm. So you buy the breakout, you sell 20% up. Let's say you get 217. 10 days later, it's 230, and you're just like, why did I do that? And then 15 days later, you're like, wow, what a great sell. And I see this a lot for solar. You buy the breakout, you sell it up 20% at 280, you watch it go to 306. Oh, why did I do that? Well, this is why. You gave it all back and then some. This happens more often than the NVIDIAs of the world. Now, the NVIDIAs of the world can pay for a lot of these. So if you're not going to sell up 20%, you have to be comfortable with the fact you're going to be wrong a lot. with the idea you're going to have one or two stocks in a like a 2-year period, pay for all those and then some. I just am not comfortable with that. It seems like so difficult to know which one is going to be that Nvidia. And you might lose 5, 6, 7, 8 times in a row before you find that Nvidia or more. It's not inconceivable or more. And then do you give up at that point? That's my fear, is you give up. And that's why I like the strategy that Bill implemented, I think is just so sound because it's replicatable. You can do it. Some of these other ones that you hear out there, I think psychologically are difficult to do. I'm not saying they're impossible. I'm saying they're difficult. CrowdStrike. We have to talk about CrowdStrike today. So a lot of you are aware of what happened, and we were, impacted tremendously as well. It hurt our phone system. We couldn't take phone calls in the morning. A lot of people couldn't log in and pull up the charts for a while. So CrowdStrike gapped down and it closed okay, not great, right on the 200-day. And I just find it kind of funny that there's something about this pattern that I didn't like, and how tight it was and how obvious it was, and everybody on Twitter telling you that look how tight CrowdStrike is, and then it blows up. Well, it blew up, at least if you bought it there. I don't know. I don't know how the market knows, but to me it was too obvious, and that's why this one didn't work. So you have a bad break, probably needs a lot of time. Somebody said that they thought the news was bullish because this just goes to show you how many people are using CrowdStrike. I thought that was an interesting take, and maybe I can't totally disagree with that take, that this company is so intertwined in everybody's IT departments that they shut down, like worldwide. It was a huge headache for a lot of people. Now they better get their act together, obviously. And it sounds like it was just the simplest of mistakes or blurbs or anything like that. But we'll see going forward. But the stock looks like it needs time. I would wait and see if it can overcome this bad break. What about AVGO? Another leading stock at or near the 50-day. And last but not least, in this area, let's pull up SMH breaking the 50-day today. It's a leading index for sure. So it's one to watch. So I'm barely I'm long two names. I'm short two names. I'm short NVDL and FNGU, and I'm long two commodity type stocks, for lack of a better term, like GLNG is one of them. And I have been for a while. Like I've been very patient with this. I'm trying. It's difficult. I'm trying not to sell it, but so far, and I've held on pretty well. So, but it's not easy to admit. So I don't have a lot of exposure to the market at this point. I think the jury is still out. AEM. So gold. Well, let's look at gold, because gold was a pretty crowded trade, it seemed like, and it broke really bad. And I actually sold my AEM on that Wednesday that I was worried about things, and I didn't like the way my overall account acted, and I sold it. And today, I have to say, it was down 1%, but it was down a lot more and held really well. So I'm impressed with the action in this, especially in relation to gold. So gold was down almost 2%. AEM was down 1%. So that's pretty good action. So if you have that one coming out of the base, I think today was a pretty good test, and hopefully it can hold that. If it can, I might be interested in revisiting this trade myself. COHR. And this is a good example of why I like to sell on the way up. So I bought Coherent, I think, here that day. let's say 70, and it ran to 80. The 70 to 80 is about 15%. Yeah, 14 and change. And normally I would sell that. And I would normally sell something like that. And I didn't. I was trying to hold on to this one. This is one of the ones I was keeping. But then it just broke so bad, I just couldn't stomach anymore. And I got out yesterday, I think. And so I turned, a really profitable trade into a barely profitable trade. And that's frustrating. That's why I like to take profits. And when I review this trade, I think about it in hindsight. If I had bought the stock correctly here, then I think that's fine to leave it. But I didn't buy it correctly. I bought it almost 10 points higher than the pivot. And so if you do it like that, I have no problem with the buy. I'd buy that again tomorrow if I had that set up. But I probably need to be more active as a seller if I'm buying stretched like that. So that's one of the things that right from where Bill would talked about on his philosophy. I would buy it correctly at the pivot, pyramid disciplined wise. I didn't do that on this trade, so I probably should have taken the profits while I had them. TLN. So let me give you a good example of one that I did do that. So here's TLN, and I liked that had the shakeout and the shakeout, and it came back, and I bought one of these days. I can't remember one of these days, and then I don't know if it made it was a cup. It looked like a flat base to me. So it comes out of this flat base here, and it ran up to 135, and I think I owned it at say 120. Not that much, about 12.5%. But I bought this kind of, for lack of a better term, incorrectly. I don't know if I like that term. I want to find a better term. I bought this, it's a non-standard pivot, alternative. That's the perfect way to describe it. This was an alternative entry for me. I was buying it due to the shakeouts, which I like. I like to buy shakeouts. One of my favorite Bill O'Neill sayings is all shakeouts are good unless you're in them. Shakeouts shake out the weak holders, allow stocks to go higher. So I wasn't in it. So these two shakeouts were good. But because I bought it alternatively, I didn't buy it at the pivot coming out of a long base. I'm going to sell into strength. So this is like the core one. That's why I'm out. I don't remember this day or this day. And look, when I sell them, I totally expect them to go higher. Most of the time they do. In this case, it didn't, at least for now. But that's an example of why you want to take some profits, because most of the time people are like, bull market, and they're like, I didn't make any money. Well, it's because they didn't take some while they had them. So it's hard. I don't know what the right answer is. I'm searching for it, but I think taking some profits is important. Last but not least, this is the new name, Tempest AI, AI in healthcare. That is as neat and a big a narrative as I can think of, and that's tempting to me. So this is the name that I'm watching. If AI is real, and I'm not certain, but I'm open to it. If it's real, healthcare seems like a slam dunk area for it. To make the way we're using AI now, where it's cat videos and haikus on the stock market crash, and to me, it's so far it's a lot of gobbledygook. It's unproductive, at least so far. Maybe going forward, it'll be fantastic, and I hope so. And if it is, I don't know if this company is the one, but if it is, AI in healthcare seems like a slam dunk to me. So this is a new name. It's not an IPO base because it's too long. This is 1, 2, 3, 4, 5 weeks long. The IPO base has to be 2 to 4 weeks. Oh, I know. And last but not least, really fairly quickly, in the medical long-term care group, Ensign broke out of a base, pulling back a little bit, and PAX broke out of a base, pulling back a little bit. another group that could be interesting, right? The narrative, medical long-term care, and it's a bit defensive too. So if the market got into trouble, this could be an area where money would flow. Might help explain why UNH, medical managed care, pretty defensive group, went from 500 to 550 in a hurry like that. Okay, so we are now into the quote of the week. And no surprise, I was listening to Hugh Henry on a podcast, and I love this quote because I believe in it wholeheartedly. So he said, one of the things that kept me wealthy was that I bought things going up and I sold things going down. We try to make it so difficult sometimes in the stock market. And this isn't perfect, but it's really hard for you to get into trouble if you follow this philosophy. You buy things going up, you sell things going down. You could get shaken out of stocks. You could buy a stock that's too high and it's ready to roll over and you have to get out of it. But you are going to avoid all blowups if you sell things going down. You're never going to get stuck in an Enron or something down 50, 60% because you sell things that are going down. And if you buy things that are going up, you have a chance to capture the next NVIDIA, the next Tesla, the next CrowdStrike, because what do those stocks do? They go up. Days, weeks, months of going up. So I subscribe to this philosophy wholeheartedly. Sometimes if I make a mistake, do something crazy, if I review that trade, almost always, if I had done this, it would have protected me from that loss. So maybe I didn't get out as quick as I should because of the name, or I was buying something that, I fell in love with and it was pulling back and I thought, oh, this looks like a good spot to buy it. And it was going down and I bought it. So this will keep you out of trouble throughout your trading journey for sure. All right. So 800-831-2525, marketsurge@investors.com. Have a great weekend. I think I'll be back next week, right? Or maybe not. If the Stay in Step is next Thursday, I can't recall if it's next Thursday or the following Thursday, but I won't do the video after the Stay in Step if it's on Thursday. Have a great weekend, everyone, and we'll see you real soon. Thanks. Bye-bye.